All right, talk about a crazy day for the stock market today, guys, and not for the entire stock market. I mean, look, the Russell and the Dow, they actually did very well, but when it comes to the S&P and the Nasdaq, that's a completely different story. The Nasdaq went down 1.4% and the S&P went down 0.5%, and the crazy thing is, earlier in the day, they were down even more, and now after the bell, they're down again. So we have to break down the indexes, guys, and 5 stocks that I'm looking at that all reported earnings. So run the likes up, make sure to subscribe, and don't forget to get your free stocks from Moomoo, up to 20 stocks with at least a $100 deposit, and your uninvested cash for a limited time will earn up to 8.1% APY. So guys, use that link down below or go to stocksurfs.com/Moomoo. Get your money. And with that being said, cheers. Let's dive right into the video. So yeah, pretty nasty red day for the S&P and the Nasdaq thanks to big tech. I mean, we saw Nvidia, like I covered in my video earlier today, that was down 7% on the day. We had companies all across the board in the red, man. We had Amazon down 1%. We had, let's see, the other big tech names here. Tesla down 4%. Let's see. We had a lot of red, I mean, Netflix, Meta, you name it, right? And now after the bell, thanks to Microsoft, which we'll take a look in a second, we're down even more. So at this point on the 4-hour time frame, which I like looking at, we're now under where we were back in the middle to the end of June on SPY. We're actually breaking through that point again. We initially did it a couple days ago. Now we're falling through it again, and we do now have a descending triangle. Do you guys see this? Clear as day on SPY, which means there could be more downside potentially, right? Not the best sign there. And triple Q, if I pull this up, this is also well under the lows from where we were in the middle end of June. In fact, now we're getting to where we were in the middle towards the end of May. You guys can see, right? 450, 455. That's where we were back in May. And if we do take this out, 453-ish, we might be going down to 440, 442. That's actually where we bottomed, it looks like, here in the beginning of June, right around here, guys. So keep your eyes on this continuation, the downtrend continuing, because we're not seeing any signs of a breakout, right? And just like SPY, we also have a descending triangle on triple Q, not the best sign. You guys see that right here, right? So if we fall under 453, like I said, boom, we could fill the gap down to 443. Maybe even it goes lower than that. But for now, that's what we're looking at. No sign of the bulls, guys. The bulls are nowhere to be found. And yeah, Microsoft is making this go down even more, which I did cover the earnings briefly in my video earlier today after the Nvidia breakdown, which I'm sure a lot of you guys didn't see that. So let's break down what's going on. Obviously, we're falling through the channel here on Microsoft. We're pretty much right back to where we were in the end of April at about 385, 390, 395. So the company actually beat earnings per share and revenue. Looks like here EPS came in at, where the heck is it, guys? I was having trouble finding it before. 295 GAAP EPS versus 292 expected. That beat revenue 64.7 versus 64.35 billion, so double beat. But what's causing the stock to drop is, you guessed it, cloud, Microsoft Azure, right? This came in at 28.4 billion, something like that. I can't find it here, but it missed the estimate, which is not good, and the growth has significantly slowed down, right? Microsoft Azure, the cloud, is growing 19% year over year, which it used to grow a lot more than that, right? So we're seeing a dump off in Microsoft stock, which initially Nvidia stock tanked as well after the bell, which it went down 7% on the day. It went down even more as Microsoft dumped because their cloud, right, Microsoft Azure, uses Nvidia's top GPUs. And of course, Nvidia is obviously very tied to big tech. Big tech is their biggest customers, right? they're the biggest customer. So we saw that dump off in Microsoft. Oh my God, cloud slowing down. That caused initial panic in NVIDIA stock, but since it's recovered. And yeah, man, we'll see how this goes. With this dump off in Microsoft, there's other big tech names taking a beating. Amazon's down to the mid 170s right now after the bell. We have Meta down as well, a good chunk here, about $14 after the bell. And they're, by the way, reporting earnings. Let's see here. Very soon. It looks like Meta is tomorrow after the bell. And we have Amazon. Let's see. When are they reporting? I think Thursday. Yeah, the first Thursday after the bell, which it's going to be big. So Microsoft is kind of causing a bit of panic right now in the big tech stocks. Well, not so much panic. I don't want to, blow it out of proportion, but yeah, it's causing some selling. We could say that. And this might have some pressure on NVIDIA's stock price moving forward, as again, these are the biggest, the biggest customers, for NVIDIA. They buy a ton of chips for their data centers. We all know that, right? So AMD, let's break down how this one's looking. And fun fact, I looked at it before. It's moving up. All right, $9 per share in the green, which honestly, I'm not surprised. I mean, we covered this on the channel. AMD, their stock has been down so freaking much over the last couple of weeks that it was kind of setting up for a nice rebound post-earnings as long as they did decently well. Obviously, if they dropped the ball, maybe they had a horrible quarter, horrible guidance. All right, maybe it could have went lower. But since we were already down, guys, 30% pretty much into earnings, maybe 25%. Either way, it was down so much that we got a nice setup for a bounce. So AMD ended up doing, let's see here, ladies and gentlemen, it looks like they did adjusted EPS of 69 cents, which beat the 68 cents expected, and sales came in at $5.83 billion versus $5.72 billion expected. And they guided for Q3 revenue of 6.4 to $7 billion, all right, versus the 6.6 expected. So very nice beat there on Q3 revenue guidance, which I'm loving. And anything else here? Gaming revenue, $648 million for Q2. That ended up beating, or actually missing, the $657 million expected. Looks like embedded revenue, $860 million versus $853. That beat. But guys, look, the main beat here is top line EPS and revenue and the guidance for Q3. That's really good for AMD. And probably the main reason why the stock is moving. Let me actually get some water, guys. My voice is crackling right now. There we go. But yeah, AMD, I'm happy about that. I mean, I think the stock got way too beaten down for not the right reasons. I mean, sure, we saw some selling in the chip stocks in general, but I think this one got way too overblown on the downside. And yeah, I'm not surprised we're up $10 after the bell, or about 5%, right? What is that percentage-wise? Actually, it might be more than that. Wait, initially it looks like AMD got down, or was down a little bit after the bell to about 135. But yeah, we rallied a good chunk. Now we're up actually way over 5%, more like 7%. So yeah, AMD, I'm watching it. Full disclosure, I'm long AMD. I'm not long Microsoft. And AMD is actually the only stock on the list that I own right now. So let me take a look at Starbucks, SBUX. Looks like Starbucks is moving up a little bit right now after the bell as the company reported numbers. Wow, looks like we got a pop to $80, pulled down. Now we're in the mid 77s. So Starbucks ended up reporting, let's see here, guys, 93 cents of adjusted EPS. That came in line, and it looks like sales missed $9.1 billion versus $9.24 billion. So inline EPS, they missed on sales. Let's see, anything else here? It looks like they opened 526 net new stores in Q3. Let's see. North America revenue, $6.8 billion. International revenue, $1.84 billion. How do they do in China? I might have to dive deeper into the actual earnings release, as they have been struggling a lot in China, but it looks like Starbucks Rewards loyalty program 90-day active members in U.S. totaled almost 34 million, up 7% year over year, which is actually pretty good. Not bad there for Starbucks. But for me, guys, I'm not in this stock. I used to own it a couple years ago, made some money, got out of it. But for me, I don't know. It's kind of on my don't touch list right now. I think there's a lot of, there are a lot of turnaround stories in the markets right now. We have Starbucks, we have Nike, we have PayPal, we have, you could throw SoFi in there. There's a lot that you can throw in that category, and I don't want to own too many of those, right? Because what if they don't turn around? I mean, what if they don't turn around, right? So sure, Starbucks might explode to 100 plus next year. I don't know, but they're struggling. They're a turnaround story, and for me, guys, I kind of want to focus on winners right now. I don't want to buy Starbucks, a Nike even. I was in Nike with the starter position, kind of came to my senses and cut my losses on that and put money elsewhere. I'm not saying Nike's a bad investment, but I feel like there's just a lot of competition. There's a lot going on with Nike, and it's going to take longer than I think to turn around. And I feel like Starbucks is in that same camp, right? I don't know. Call me crazy, but what do you guys think about that? PayPal is another one that I used to own. It's a turnaround play that I don't want to be a part of. I don't want to be a part of it right now, but kudos to the people that bought it. It went up 9% today. PayPal reported earnings in the morning, and it looks like they did pretty well. So let me actually pull these numbers up. It looks like they did adjusted EPS of $1.19, which crushed the 98 cents expected, and sales also beat 7.9 versus 7.81 billion expected. Double beat for PayPal. And let me see, anything else here worth mentioning? Guidance, payment volume, anything like that? It looks like they are raising their 2024 guidance and increasing share repurchases. All right, so they're buying back stock, increasing guidance, which is good, guys. And yeah, let's see. It looks like we got some upgrades. Baird upgraded them to an $80 price target from 77. Susquehanna from 71 to 83. All right, not bad. Evercore ISI, let's see, from 70 to 72. So we're getting an upgrade, a bunch of upgrades in prices, double beat, increased share buybacks, and a beat in guidance. Hey, that's going to cause a beaten down stock to move up, and that's exactly what we're noticing on PayPal right now. But guys, be careful on the charts here. We can see clearly we're at the bottom, or excuse me, the top of this channel right now, which could be a very big resistance, as it has been throughout the course of this year. You guys can see this chart, so be very careful with PayPal. And last but not least, guys, a stock that is tanking right now is PayPal. Or not PayPal, geez, Pinterest. Oh my God, guys. I need to get some coffee, and I need to stop working for the day, man. I've been going too much today. But there's a lot going on. I can't look away from my computer, but it's been a long day, all right? Pinterest, PINS. This stock closed at 37. It got down to 29 after the bell, 21% initial drop. Now it's rebounding a bit, all right, but it's still down 12% from close. So Pinterest, guys, what happened here? Well, they ended up beating EPS adjusted, 29 cents versus 28 cents, and they beat on sales, $854 million versus $847 million, so double beat for Pinterest. All right, not bad. And they see Q3 2024 revenue lower than the estimate, right? There it is, 885 to 900 million versus 907 million previously expected by Pinterest. So they cut their guidance, never a good sign. And it looks like here global monthly active users increased 12% from year earlier to 522 million versus the estimate of 522.2 million. All right. And the crazy thing is, I just looked at the clock, guys. It's 522 right now. What the heck? That's weird. As I just said, 522 million. I looked at the clock. It's 522 when I'm making this video. What the heck is going on, guys? But yeah, that's it. They beat EPS revenue, but they cut their own guidance. not a good sign. And yeah, the stock's tanking right now. Of course, stocks are forward-looking vehicles, and if guidance gets cut, a lot of the time, that causes stocks to go down, and right now we're back to the lows from the end of April. So what do you guys think? And again, full disclosure, I'm only in one of these stocks, being AMD. What do you guys think? Let me know your thoughts in the comments down below. Hit the like button and make sure to subscribe and check out the email list. I'm actually sending an email every single Monday morning for free, my top 3 stocks for every single week. All you guys have to do is put your first name and your email down below, and it's completely free, no BS, no spamming, just straight up stocks and charts every Monday morning. So if you guys want to sign up, again, down below. And with that being said, cheers. I'll catch you all in the next video.